All right. Hey, everyone. Thank you for joining us today for our live stream where we're going to answer some of the more nuanced questions we get about cannabis businesses, specifically some stuff around audits, taxes, filings. You see that we've got a stimulus package coming through that came through, I think, at like 1 o'clock this morning, and some things that you need to understand about your taxes and how they can impact maybe the next 30, 60, 90, even 180 days of your personal life as well as your business. So if you have any questions, please drop them into the chat right now. We'll get to those if we have time at the end. We're going to go here for maybe 20, 25 minutes. You've got 6 questions that were submitted earlier within the week this week when we sent out that request on Monday. So again, if you have questions and we send an email out requesting them, you can reply back to the email, send them in to us. It always helps us create content that's the most valuable for you. We're not doing this for our health. We're doing this to bring value to our community, value to our clients. So again, thank you for joining us today. Appreciate you guys being here. We're going to start in maybe like 1 more minute, let more people come into the room here. Good to see you, Madison. Thank you for joining last week on Friday. I didn't get to say hi to you in the chat, but thank you for joining last week, Madison. Tim, good to see you. We'll be getting started here in a moment. All right, let me pull some notes up here and we will get started here. All right, so, I think we'll just get started here. We've got a fair amount of people in, we've got enough going on, and we're going to send a replay out to this too. So if you can't stick around for the full thing, we will have a replay for you. So the first thing I want to talk about today is the economic stimulus stuff, but it correlates to a question that we get quite often, and I saw it come through our CRM at least 3 times this week. And it's potentially comes down to, I haven't filed taxes in a few years. Should I file now or continue to wait to this other deadline? Now, I would recommend, and Derek, you can jump in if you have any other changes to this, but file your tax returns right away for a few reasons. First, again, for this economic stimulus, if you haven't read it, there's $1,200 coming out to every adult under $75,000, and it fades out between $75,000 and $99,000. But what you need to do is, if you haven't filed taxes, you may have some changes in your life, right? Because not just for adults that are getting this, but for children. So if you've had children since the last time you filed your taxes, you may want to file your taxes now so you can get a bigger economic stimulus check. Now, what they said is that these checks are going to be based off of your 2018 tax filings or your 2019. So if you have updates, again, if you have more children, maybe you have less income, you hit below that threshold, or you hit below that phase out period, you may want to get those taxes filed right away. So again, reach out to us immediately if you need help with filing your taxes. We can give you kind of the strategy and the right way to do it. And, one thing, if you haven't filed taxes for a while, you may be on the radar for potentially an audit. So you want to create this paper trail of filing on time and accurately. And working with a CPA can help you do both of those, the on time and the accuracy. So if you need help with filing your taxes to make sure you get the most in any kind of part of your business, the financial impacts from that tax filing, then please reach out to us. If you know our website, it's greengrowthcpas.com, as well as you can give us a call at 800-674-9050. So if you haven't filed taxes, file them right away. There are many benefits to that. And then Derek, why don't you hop into the next question we've got here?
Yeah, definitely. So the question is, I'm an investor in a cannabis business, and I believe that the funds I've invested have been inappropriately used compared to what the intended use of the funds was when signing the deal. So this is a really good question, and we've seen it pop up more and more. I think Q3 and Q4 of 2019, you really saw a lot of these cannabis deals just really go belly up. People are just misusing funds. You saw some high profile cases like MedMen. What's really, really important is you get a third party accounting firm, whether it be a CPA firm, forensic accounting firm, or someone who's a non-biased third party to either review, compile, or potentially audit the financial statements. What you can then do is you can say, hey, you misappropriated or misused these funds. I want my money back. And, what oftentimes, it depends on how the agreements are structured, and always check with your lawyer. you could potentially then force them into receivership if they don't want to pay you back. And pretty much what the receivership does is that it sells off all the it appoints a third party by the court to sell off all the assets to then pay you back. So let's say, for example, you invested $1 million in a cannabis company. They bought a license, they did the build out, but then they're just not running it correctly and they're just completely blowing it. You can force them into a receivership so then they can sell off the asset, and you can use your $1 million investment as the opening bid. So in a receivership, what happens is the court appoints a third party to sell the assets, and it's an open auction to the highest bidder. So you can then use your initial investment potentially as your opening bid. So it's also kind of a backdoor approach to taking over the company that you potentially invested in, because if they're not operating in a way that you like, instead of trying to strong arm them in a legal battle, you could push them in a receivership, and then you can use your initial investment to take over the entire company. So it's a really great opportunity for any sort of investor that's not so happy with their investment.
Exactly. We've had a few clients that are going through this. We're, helping being that third party, because sometimes you may need just that audit as a value or evaluation to say, all right, these assets are worth this much, this business is worth this much, to create maybe that opening bid and things like that. So, if you need help with that, you can reach out to us. We've got experience in that as well. Now, another thing I want to bring up here is that there is a small business federal assistance going out to the restaurants and the hospitality industry and any other business that's closing down or feeling the impact. And one question we've got, I think I've seen it at least probably 9 or 10 times since last Tuesday or Wednesday, since the last live stream at least. Do cannabis businesses qualify? And pretty much since the SBA, the Small Business Administration, they've reiterated this past Monday that marijuana companies are not eligible for disaster relief loans to lessen the blow of the coronavirus outbreak. Now, this is because cannabis is still illegal at the federal level, and these benefits are coming from a federal organization. And the marijuana industry is being denied access to these opportunities, including those that are administered by the SBA. So there are exceptions, though. So if you are a CBD company that uses hemp-derived CBD, that's why it's very important to know your supply chain on where your ingredients come from. Because if it's a CBD derived from, marijuana or cannabis, you will not qualify for these loans. So I'll just read a quote here. So with the exception of businesses that produce or sell hemp or hemp-derived products that were federally legalized under the 2018 Farm Bill, marijuana businesses are not eligible for the SBA-funded services. But one thing to look into, especially if your state has had cannabis going for at least 12 months, there may be some type of packages allowed or available to you through your state legislature or through organizations or whatever kind of small business administration is within your state. So, reach out to the economic portion of your state legislature and see if there's anything available for you. And, if not, there are many other finance options. There is a liquidity shortage right now. People are kind of tightening their belts as investors, but there are people that have money. There are family offices. There are institutional investors. So if you have traction, if you are on a good trajectory, but you've kind of hit a rough spot with your cash flow, there may be something else out there for you. So, reach out to us. Maybe we can pair you with the right person. No guarantees, but let's make that conversation happen and kind of get things rolling. If we can't help you now, maybe we can help you in 3 to 6 months. So again, the economic stimulus package through the SBA is not available to cannabis companies, but if you are a hemp-based business, you may be able to take advantage of those SBA loans.
Yeah, and to kind of add off that, Jim, if you also set up let's say a real estate holding company or an asset holding company, you may be able to get an SBA loan. It's the licensed cannabis company that's not that's plant touching is generally not able to get the SBA loan. But if you have maybe a management company or something along those lines, that could potentially work.
Yep. If you have a multi-entity cannabis business, depending on how stretched out it is, perfect. That's a great nuance to add to that. Cool. Let's head on to the next one here then.
Yeah, so this is a question we get a lot, which is I made no income in 2019, but spent a significant amount of money getting my business started. Do I need to file taxes? What if I made some product that didn't sell? So this almost happens to almost all cannabis operators, which is, they have like maybe 1 or 2 years of just heavy startup expenses, and they won't show any income. It's really, really, really important that you do file your taxes, because those losses, let's say you had a net loss of $250,000, and the next year, once you start generating profits, then you will be able to offset that loss against your income. So, if you didn't file your taxes and you didn't claim those expenses, once you start generating revenues, you're going to be subsequently overpaying your tax. So it's really, really important that you file your taxes with a net operating loss, so you can carry that forward to future tax periods.
And then there's also with the product, if you sell product, you don't want to make those cost of goods sold in the year if you didn't sell them. You want to make sure you allocate those over to inventory and then make an accrual adjustment in the subsequent year when you actually do sell those products, so that you have some cost to offset that revenue in that second year or third year, whatever year it is. So make sure you have a CPA or someone giving you guidance on the right way to book costs, and don't overtake costs in certain years and undertake them in other years. You want to make sure they're allocated properly. We did a video on inventory costing maybe like a week and a half, no, probably like 3 weeks ago. So you can check that out on our YouTube channel. Very important that you get those allocations done properly, especially because COGS is the only deduction you can take as a cannabis business, or that's been allowed, I will say, as a cannabis business. So making sure you get that number right is very, very important. Another one here, we get quite often. Let me see, is this yeah, I think this is going to be the last one here. So if you have any questions, drop them into the chat and we'll answer those. We're kind of crushing through the content we already have here that we've gotten come through. But next one here is that I received a letter from the IRS about underreporting of income. What should I do? Now, we all understand cannabis is cash heavy and there's a lot of money coming through the door. And it's very easy for you to say, well, let me just take $2,000 off the revenue, $5,000, $10,000, maybe even $100,000 off the top, so you don't have to pay taxes on that, and then use it to buy lunches for people or supplies or this or that. That is not the right thing to do, right? It's very, very important that you file accurately. So first, if you get this letter, reach out to your accountant immediately and let them know what's going on, because it could have been just maybe an error on the tax filing, maybe a zero got missed, maybe an expense didn't get added in there properly. So just reach out to your accountant, engage them. They may not offer audit support included with your tax return filing. You have to look at your engagement letter, but reach out to them, have a conversation with them. I'm sure they'll speak with you for 10, 15 minutes. Now, second from that, make sure that the numbers that you provided to your CPA or the person preparing your taxes was accurate to the best of your knowledge. Now, most accountants are going to prepare your tax return with the numbers that you certify are accurate. They're not going to go into your POS system and pull everything, go into your cash log. They're just going to ask you for A, B, C, D, E, F, G numbers. Give me all these numbers, and then they can prepare your tax return. Now, third, if they are not accurate and may have miscalculated, you have miscalculated some revenue, then share those numbers with your accountant and let them work with the IRS to amend your return and figure this out. You don't want to just sweep this under the rug. It's on the IRS. The ball is in your court, but the time is on their side. They have nothing to lose. They are the Internal Revenue Service. They will find revenue where they need to find revenue. And then just engaging into an audit will help them potentially find more revenue. So quickly about audits, you need to understand that the federal government, we've been doing legalized cannabis now from Colorado, I think we're in the 6th year, 7th year. And there's been many other medical shops for much longer. They have enough data now to run algorithms to find statistically significant, edge cases in the data to be audited. So for example, if 8 dispensaries operate within 3 or 4 close zip codes, and they're all well above $3 million in revenue in their second year, and then you only report maybe 1.3 or $1.5 million in revenue, you stand out. And you may say, okay, well, when we file out our business code, we don't write cannabis dispensary. We may write retail. They know you're a cannabis business. All this information is public. your EINs, they can find all of these things. So don't think that you can hide from the government. They've got all the data they need. So again, to the IRS, it doesn't hurt for them to reach out for further clarification. And our job as a CPA firm and as accountants is to do this service for you. So don't lie, don't hide income. We're here to help you out. We want to get you in the best position possible, and being truthful and honest in that is very, very important. And with an audit, one piece leads to another. They find a problem with revenue, then that just opens the door to, hey, I need this line item. Give me more detail about your COGS. And then this can snowball very, very quickly. Now, one thing that we saw with audits, the few that we helped with last year, was that Form 8300. I'm going to harp on this quite often because we're in tax season. We're well deep into tax season, but these are the triggers for audits. They know, again, that we're cash heavy business, and they want to know where your Form 8300s are at. Again, they have these algorithms that say, all right, these are all the cannabis businesses. These are their revenues. This is how many Form 8300s per $100,000 in revenue. Maybe it's 2 per $100,000. And if you have $1 million in revenue, you should have close to 20 of these Form 8300s. If you're filing 3 of those, they will know that, hey, where is this Form 8300 at? And why haven't you been reporting this income? Because potentially you're sheltering this income or diverting this cash out of your business to not pay taxes on it. So make sure that you're filing your Form 8300s. Make sure you're being very truthful with your accountant, and work with your accountant. You don't have to be in an audit alone. This is something you have to engage a team to help you with. So if there's any more questions, drop them into the chat here. That's all we have for the prepared content for today. We've got a few things going on here. Let's see, anything else? Derek, is there anything else you'd like to add to anything we've chatted about today?
Let's see here. Yeah, I think what's really important to add is the statute of limitations. So I know a lot of people are really worried about, okay, well, I filed my taxes, am I going to get audited? The audit rate it's super anecdotal. They obviously don't publish these numbers for the more obvious reasons, but generally the IRS has 3 years to audit you. So, if you're holding your breath for 2016, tax year 2016, you're generally okay by now, or 2015, if you're holding your breath for that, you're probably okay now. The obvious exception is fraud. So if you just don't claim your income, there's unlimited statute of limitations. So when it comes down to what to report, what not to, what to deduct, what not to, always claim all the income. And when it comes to expenses, that's where it gets a little gray. So you want to make sure that whoever is preparing your return, they know what they can aggressively, conservatively, and moderately do. But when it comes to your income, you got to report it. That's not reporting your income is where you open up the most holes. Where you get kind of wonky is your expenses, and it's generally up to whether you prepare your taxes, the tax preparer, or the respective IRS agent that audits you. And just so people know, the IRS is a massive organization, and it's dependent on each agent and how they will presumably audit you. Oftentimes people say, well, is this the approach the entire IRS will take? And the answer is maybe. There are guidelines that the IRS does publish on how they audit and their methodologies and things of that nature, but at the end of the day, it's dependent on the agent. The other thing that you could potentially do is what's called the IRS private letter ruling. So if you're like, hey, I don't know if I should take this tax position or not, it's super aggressive, and you can actually request that that the IRS will comment on that issue. So it's a little bit expensive and it's a long process. Usually the fees are anywhere between $500 to $50,000. But you pretty much, you ask the IRS, hey, I want to take this position on the return. What do you think? And the IRS will then come back to you and say, okay, you can or you can't take that position. Doing a private letter ruling is good when it pulls in your favor, and it sucks when it doesn't, because if you spent $50,000 or more and they come back and say, no, you can't take that position, the coffin is pretty much sealed. But there's a lot of different strategies and positions you could take on your tax return while working within the confines of 280E. It's just really important that you know what you're doing.
Yeah, having that reasonable methodology. Don't just do willy-nilly throwing things into cogs. You really have to be thoughtful and have a good tax preparer that has experience in it. We worked on thousands. I think we're probably multiple thousands of returns for the past few years. So you got to make sure you have the right methodology to back certain costs in. And by expanding your licenses, you may have access to other tax codes and tax laws that allow you to allocate different costs into cost of goods sold. Good deal. All right. Well, if there's no questions, if I'll wait, one more minute here. If you have any other questions, drop them into the chat. If not, we'll, potentially do another one of these next week. Maybe go every other 2 weeks. We took a little break from the webinars this month, but we wanted to kind of get on here, be live, and share some of this information that's kind of breaking news, as well as things that are relevant to the times of taxes at the moment. So again, if you have any questions, please reach out to us at greengrowthcpas.com. Click that Get Started button in the top right corner, and then fill out the form. Someone will reach out to you as soon as we possibly can, as well as if you want to give us a call at 800-674-9050. Have a great day, and we will talk to you soon.
Oh, we got a
question here. Yep. Yeah, Terry, there will be a video available. We'll have the replay available for tomorrow. I'll send it out in an email to everybody so you can, check through if you miss any of the live presentation here. And then go ahead, Derek. There's a question on it if you want to get to that.
So, Kara, the question is a little off topic, but is it okay for dispensaries to purchase on net terms? It honestly depends on your relationship with the vendor and also your internal company cash flow. General strategies, if you're a dispensary, your strategies are to accelerate your receivables and extend your payables. So what that means in basic terms is collect money as quickly as you can and then pay people out as long as you can. So it all depends on your cash flow and also your relationships. There are certain brands in various states that require COD. So it really depends on what city and state you operate in. One also thing to be aware of for those of you that are in California, Oxnard, the city of Oxnard and the city of Pomona are coming on retail, manufacturing, cultivation. For those of you that are still interested in getting involved in cannabis and you're not involved quite yet, retail applications and getting retail licenses are almost always valuable, and the other applications or license types are not as valuable, to be quite frank. It doesn't make sense to have, a 15,000 square foot cultivation site in, the San Francisco Peninsula. Your rent's going to be insane. And once more and more operators in, the Central Coast, Emerald Triangle come online, it's just going to kind of sweep house. So retail licenses are almost always valuable wherever you go, but other license types may not be as valuable. So, for example, Pomona or Oxnard, they're putting these high fees in place for a testing lab license. You can go to the city of LA and just apply for a testing lab license right now. Like it's open to anyone, so when people kind of clamor over like certain cities coming online, sometimes it's just not worth it. Look at the city of Long Beach, they're totally open. So, I think what's also really important right now to look at too, is that a lot of people are falling by the wayside. So you may be able to pick up, a fully built out facility for, $2 to $3 triple net a month. So, I saw something on LoopNet, amazing LoopNet, that had $3 triple net in the city of Long Beach for a full built out cultivation site. It just didn't work out. See a question from Colin. Do you guys have any info on the state of Illinois? We did a lot of social equity retail applications for the city of Illinois, for the state of Illinois. And it's, if you have any more specific questions, I'd be happy to answer. See another question from Billy. Is it a good time to start a cannabis distro business right now? Billy, depends on how much money you have. We have a location in Los Angeles, California that you can get plug and play. It's open right now. Distro, you have to be really, really solid on your SOPs, because if you're not, you're going to get crushed on the excise tax. You have to always make sure to collect your excise tax up front. and you always have to put that money aside. I think, Billy, if you have at least maybe between 150 to maybe 250,000 startup, you should be probably good to go. Distro's good if you have a strong background in logistics. If you're a cannabis connoisseur, distro is probably one of the worst businesses you can get into right now.
Yeah. Gotcha on that. Yeah. And one of the things too is like, we're also noticing like, with distros, if you're going to serve like the entire state of California, like it's a 13 to 16 hour drive north to south. So make sure if you're allocating, you're either going to be in one area and stay in that area and service that, or potentially allocate income to and have a plan for expansion so you can hit the north and south, because you can't be on the road, I think, from like 10 p.m. to 6 a.m. with product in a vehicle. You have to make sure that that product is off the road. So one of the things about if you're in NorCal, it's, one of the things is, all right, cool. You have your base operation in NorCal, come get into our building on Broadway and then, have a hub, a distribution hub, just to be able to drop product off. You don't need to have a large footprint, but it's something that you can do. And then, there are other licenses that are on that micro biz. It's not just the distribution. So it allows you some flexibility there. And Kara, I get you. It's rough. It's really, really rough out there for dispensaries, rough for everybody. I mean, hopefully you're making money right now. We're in this, how do you call it? Social distancing, shelter in place. We're seeing, large bumps in revenue in the initial first few weeks here of this. Who knows if that's sustainable? I'm not sure how much of you guys know about the economics of the Great Recession in 2008, 2009, 10. People, and I'm going to make a video about this this week or next week. But one thing you're noticing in that Great Recession is that the alcohol consumption went up. People are stressed. They want to relieve. They're going to go up. It's going to go up, but they're going to trade down from premium, ultra premium products down to mid-level to lower tier so they can continue the higher consumption at the same monthly rate. So I think cannabis businesses are essentially recession-proof, but different brands and different products are going to feel a little bit of a pain, in that trade down. So if you're a retailer, consider trying to sell off some of your expensive inventory right away. Encourage your clients to treat themselves, buy something nice for themselves, because if people are out of business or out of work and they don't have any money or less money come April, May, June, even though we're getting the stimulus package, they may be allocating that to rent. You need to make sure that you have products that serve the needs that they have and the desires that they have. Got you some more questions here. Jennifer, still having problems with banking and merchant services. Any recommendations? Is CA still looking for its own state bank? Derek, do you have anything to add to that?
Yeah, definitely. So it depends on where you're located. We know we have banking contacts throughout the state. So just reach out to us and let us know. We'll be able to connect you with the bank.
Cool. Yeah, that's perfect. Reach out to us, greengrowcpas.com, or give us a call, 800-674-9050. Kara, working on launching that delivery in Oklahoma, just iron out the legislation. Yeah, Oklahoma is been the biggest surprise for me. I mean, it shouldn't be when you look at, back at how easy it was to get a license and how explosive the industry has been. But I think it's such a beautiful thing happening out in Oklahoma. We've got a sales team out in Oklahoma right now that's just been, really helping a lot of people out there, a lot of vendors out there. Shout out to Lawrence. You've been, crushing it if you're on the live stream here. So thank you for that. Madison, cannabis delivery startup costs. So, I mean, it depends on what city you're going to be in and if you're going to be buying a license or if you're going to be starting fresh. I would say nowhere south of $500K, maybe even $750. It's going to be significantly cheaper than a storefront retail, because you don't have to do in a very sexy build out, but you're still going to need probably at least $500K for build out, licensing, the regulation stuff, getting inventory, setting up POS systems, buying the trucks or leasing them, hiring and training people, carrying insurance. It gets very expensive. And I know a lot of people say well, why does it cost so much damn money? It's not all you're going to spend it all right away. It's just that you don't want to go. You want to have at least 6 to 8 months of operating capital, which is your monthly expenses in the bank waiting, because you may not turn a profit right away. You may have, the fire system go off and everything gets wet and you lose all of your inventory, or, a delivery driver makes a big mistake and you get a strike on your license and you have to stop operating for 30 days. These are all the things you want to have. You don't want to be caught without it, because if you get, 87%, 94% down the line and you don't have all the money to make it happen, your business will fail, and it will be like such a lost opportunity. So be very thoughtful about, trying to do things on a shoestring budget. If you're going to do fundraising, potentially like get $250,000 $1 million committed, and then do it when we call tranches. Ask for 180 up front to do the build out, then ask for another 120 to do this, and then another 150 for this. So then you're slowly building up and pulling that money. And maybe some thought around that. Billy, the info on the distribution business, just reach out to us. Go to greengrowthcpas.com, fill out the form, let people know, it says like, how can we help you? Let us know that you're interested in the building in downtown LA and that you were on the webinar, and we'll make sure that someone follows up with you as soon as possible with that. Good, Kara. I'm glad you like Lawrence. He's a great guy. Great guy. But all right, I think if there's anything else, let us know. And we'll be hopping off here. But again, thank you for your time today. I hope this content has been valuable for you guys. I wish you much success. I don't want to say good luck because that means you have no control over it. I wish you much success in moving forward with everything in this crazy times here. And then again, if you have any questions, reach out to us via the website or a telephone, and we'll get back to you here. I'll answer one last question. I see something popped up from Jennifer. Do you have regs or info on dispensaries that are closing and wanting to sell off products? Do they have to give it back to the distros for resale or to another retailer? Derek, do you have any guidance on regs between retailers? I think distros have to move product, correct?
Yeah. You have to make sure that excise taxes are collected, and if the product goes bad, there's special remediations and ways to destroy the product. You can't just throw it in your trash can. Yeah.
Jennifer, reach out to us and I'll have someone potentially take a look into getting that. And they can do like a 5-minute quick search on that. We'll just essentially do a Google search. But aside from that, if you are running into the issue where you're closing and need to sell off inventory, reach out to your legal team. They'll know more about the regulations. We're not a law firm. We do the taxes and financial compliance side of things. There's a lot of little nuances to the transfer of assets, product. So I don't want to say anything that's not accurate to that. So reach out to us. We'll do a little sweep there. If not, reach out to your legal team. But again, everybody, thank you very much. Ramon, thank you for joining. Everybody, thank you very much for joining today. Have a great rest of your day, and we'll talk to you soon.